Hey everybody, welcome back. We have a lot to go over with Bitcoin hitting all-time highs, S&P futures now with an all-time close, and of all things, the Nasdaq actually leading, closing up 1.5%, with several names still running after hours. So we have a lot to go over, so let's just jump into it. Now to start with, at 8:30 today, we had the annual inflation rate, or CPI, come out, and it edged up to 3.2% and compared to the 3.1% in January, which is above the forecasts. The monthly rate rose to 0.4, and that is from 3 as expected. So that came in. Prices for shelter and gas contributing to the over 60% of the monthly increase. This is really important for people to get because I'm going to walk you through something that if you're new to this, you already are aware. But if you're not, you're going to learn something back of envelope way to calculate CPI and see if you're going to come in hot or not. But gasoline contributing to over 60%, and so is shelter. So shelter's an easier one to look at through some other data, but the easiest way to calculate this out is to look at just gasoline futures. So if you are on something like TradingView or whatever system you use, if you just come here and go through we'll just do it this way. So I already have them marked off. And so here's January 31st, and then here's February 29th. So you just go to the next date, and you're going to go, where did we open? We opened here, and then you go right to it, and you can see that gas over the course of the month is up 5.7%. People will say this is too simple. You can't do it this way. If you've been watching these videos, I have been doing this since I started these videos about 2 years ago. Is when we really started doing these, even though the channel says longer. I've only been putting them out for 2 years. Ever since we've been doing this, you'll find that we're within a range of saying, is it going to come in higher or lower? It's pretty obvious how this plays out. People say, well, it can't affect core CPI because core doesn't have food and energy. I would just always say, well, how do they get your medical supplies there, right? Everything is linked to gas or oil in one way or another. It's just the way that it is, right? Even your medical bills. I mean, everything is just tied to it one way or another. So it's actually silly that they even break it out. But if you do it this way, and then the other way to do it as well is just look at crude oil futures, and you just combine the two and just get a sense of where you're at. Here you can see obviously the open and the close, and you can see 3.6. So when core CPI came in higher, we were not really shocked by it. What was shocking was the move, but we also know kind of how to mitigate that move and really benefit from it. So I'll show you what I mean by that. And while I'm getting this all out, I want to say something to everybody today if you traded today. Today was an insanely hard day to trade. If people are telling you that today was an easy day and everything went according to their plan, I have a really tough time believing that because you had data that quite frankly wasn't great, and then you sold off, broke key levels, then went back over those key levels, and then had other news on tech that moved you higher. So even when you look like you were going to break later in the day, which you can see right here, you just didn't. And there's nothing really that would have done this, right? People would say, oh, well, it was the bond market. And yeah, you had the bond market. We all know what happens around 1 o'clock. Obviously, we're all aware of this, right? So again, 1 p.m., you have the 10-year note auction on the same day as CPI. So we all know that is, of course, something that you're going to want to pay attention to. And then you can just kind of come here and almost set your watch to it, 12:45, come in here at 1 o'clock, starts getting disseminated, and then you can start to see how we started to move. But as always, we mark off the first 1 minute bar because we want to see how we're going to act from where the algorithms are on the news. And you could have done this on any chart whatsoever. We did this on a couple today, and we saw a couple things that were pretty obvious here. Let me show you one. So if you come here and you look at just the 5 minute and you mark that 5 minute off right there, this was, as I like to say, absolutely glaring, where you ran up, rejected, complete Matumbo off of it at 9:30, rejected, couldn't break the low, bounced off of it. Doesn't really get any cleaner than that, does it? Right there. Doesn't really get any cleaner. Not really. And what'd you do? You flipped, went through it like Swiss cheese, ran back up, retested around 1 o'clock. It makes it look so easy after the fact, doesn't it? Right? And that's what's so great about this. Someone will say, well, it hit my levels, so I knew. Well, what happened every single time it broke your levels, right? So what you want to do is you want to have a game plan, but you have to understand that game plan is going to have to be adapted. To me, when we started cracking into this, it looked to me like we were going to crack. Obviously, we did not, and we pushed higher. My larger concern with the market, before we go into a couple other things that I think are really important, such as smart money, dumb money, my larger concern is things like this that I find very troublesome, where you're just up 100 points, down 100 points, up 100 points, like it's nothing, like literally like it's nothing. And this is one that candidly I had a short position on, did quite well, but it was almost impossible to get out of the thing. Even when it's moving like this, it's just not very liquid. And we're seeing these kinds of movements over and over again, where even like SMCI, I had a long and I was doing well with it, but somewhere in here, when I got involved with it, it might have been like here on a wick or something. Out of nowhere, boom, I'm down like $15. And that starts adding up pretty fast. So there's a lot of really wild moves today. So if you struggled today or had a bad day, this was about as hard of a day as I've had in 24. Of all of 24, I would say this has been the hardest for me. And just trying to understand what the thought process was, why they were moving the way that they were moving. I get it. Someone will explain to me that I don't understand something. I've been doing this 2 decades. Believe me, I understand when I don't understand something. And today I didn't understand something. Now, here's the problem that I see. When you start having these kinds of movements, it's telling you a couple things. So for example, when you start seeing this, like this isn't crazy, this move. It's not absolutely insane what happened with NVIDIA. And I want us to talk about smart money, dumb money. I don't want to go off in too many tangents just yet. And we should talk about Oracle as well and ON. There's some time bombs out here we need to talk about. But when you take a look at something like NVIDIA, really all we did was come down to the 12 and then flip over here. And this was actually even something we talked about in the pre-market live. I would strongly suggest that if you can watch these pre-market lives, you do. Even if you can't attend at 8:30, I run them, and sometimes I can't even attend at 8:30. But if you take a look at some of these, people brought this one out today, Bros. The guy nailed it. I mean, 32, and then you're up here at 34.15 after hours. Absolutely nailed it. Not my idea. That's why I like doing them, because there's constant ideas. There's 8,000 names out there. I can't look at them all. But really, all we did was flip, right, and go. Now here's the rub. Everyone will say, oh, well, it's over. We don't know that it's over and we're just going to go back. You have a wall of sellers up here at 951.35. So we have 951.37. So we're going to have to see that and see how it plays out. Where, again, I had real issue with today was the level of volatility. And again, it looks so simple when you look at it at the end of the day. And that's why I always tell people, like, don't beat yourself up. Give yourself some grace. Let's just put that in a regular trading session. And let's get rid of that. Let's just make that bear before we confuse people with my Bollinger Bands and all the different levels. But let's get to this. So we can see the break. We couldn't get the gap fill. We came to the top of that 350. And some people could say, okay, well, that was a sign because the people that were selling at 350 level, they became buyers. You could make that argument. You could see how we start to rotate down. You could say, oh, we have to buy the flip. Yeah, that was the easy trade. This was the easy trade. The harder trade was trying to understand what was going on here because you weren't holding levels. In other words, you're making a high, then you're making a higher high, and then you come here, lower low, and then you're going up. And people say, well, it's simple because you're just forming these. Okay, well, how many of these do you hold? How many of these do you lose before you get out? So in other words, oh no, I'm going to buy the breakout. You buy the breakout and then you get undercut. You buy the breakout, you get the undercut. I'll say it again, but you're going to tell me that this channel was something I had to get in? When should I have gotten in the channel, right? So this is the point that I really want to get through today. Anyone that tells you that today was just super easy, it wasn't. The easiest part of today, in my opinion, was just the amount of just people just getting torn apart. And you can see that. So, and let's just call it what it is. If you take a look at the leading stock and you look at it and you just put that box in, the majority of the day, the majority between 11:30 to here, you can even go back further, you were in this box that I just drew. All right. And that's not, you came out of it a little bit, but down here, but other than that, you were really in this box. Quite frankly, if you really look at it from that perspective and I tighten it up, you had a couple anomalies here for a couple minutes, and the rest of the day you were in this box, which is not a lot, right, for a $900 stock to have a 10-point swing. Then you can see that 350 level, and then the buying just ensued. And since then, you're up after hours, and you have some decent news with Intel being scrapped. And this is kind of interesting. Intel's being scrapped at one of the facilities where I think it's the Pentagon that says we're not going to have enough money. We're going to go a different way. Stock's hardly down on it. Frankly, it benefits Taiwan Semi more than everybody. And I'm surprised Taiwan Semi is only up $1.50 at the time of watching this. You might want to look at Taiwan Semi because that's a pretty powerful move there. And I think that could continue into tomorrow when people understand that Intel is trying to compete on the foundry side. And you have this. But before we go off on another tangent, I have a lot to go over, specifically the news on Coin that's got it down $10. But I've gotten tons of comments, and I appreciate all your comments, and I appreciate you sharing the video. It actually shows me who shares the video. Purposely do not run ads, so your sharing helps with the algorithm, makes up the difference. I want to go through smart money, dumb money, because we are seeing some things there that point out why you should not refer to this as smart money, dumb money. Now, for those that are new, we do not refer to this as smart money, and we do not refer to this as dumb money. We're going to put little X's here. How we refer to this, let's clean that up, and we'll actually make them X's. How we refer to this is institutions, and we refer to this as retail institutions. Now, the reason that we separate them out that way is because it's a little cleaner on the movements. I'll show you what I mean by that. So when we look at the red line right here that is dumb money and the blue line that is smart money, the way that this is calculated is through investment vehicles that specifically institutions would do. And the red line is calculated through investment vehicles that retail would do, meaning odd lots or orders on options under 100 would be more towards an institutional level, things along those lines. Different futures, investment products, things like that. And that's how this gets skewed. Now, one of the things that we've been talking about for some time, and this is just a 5-year chart, we're going to go through a couple different time frames and talk about the spread. The reason that I'm even showing this is because of your comments. You've asked to see this, so since you're asking, and I get enough requests for it, I have no problem working it into one of the videos. Remember, this is Sediment Trader. This is not something that I put together. But if we see how this is going, well, we started to head back down, and then all of a sudden we're going back up. Now, what's interesting about this is that retail has been leading the way, and we're going to see that in a minute here. That's why I don't want to refer to this as dumb money and smart money. We want to refer to this as institutional and retail. And now we know why we refer to it like that. But you will notice something fascinating here that we're going to get into in a moment. If you take a look from that line on that I drew right there, and we just make it, we might as well just make it a square so you can just see it that way. But if you come from here over and we look at this section right in here, what we're going to note more than anything is that the spread between these has not really changed. And when we dive into that, that's kind of neat because it's the spread actually that makes a difference between the two. Not so much their positioning, but where they are in regards to the spread to one another. And that's really what we need to focus on. But before we get there, note how this is starting to go higher again. Note that when this pushes, it means that retail is coming in the market. What we usually see is retail come in the market and then institutions will dump on them. They're in blue. And then when the institutions dump, when they are done dumping and retail is its fattest, what happens here? Womp womp. And then we start to see that the market will drop, right? If you take a look here and you take a look from here over, you can see what I'm talking about. So it's very important for me that when I show something like this, that not only do you take a look at this and get it, but understand why I'm showing it. I'm showing it very specifically because if you understand what it is, then you can use it the way that you want to use it. You don't have to use it the way that I'm using it. You may find some other different use for it. That's why it's so important to understand these data points that you're looking at in indicators and oscillators. I use several different ones, different ways. I use RSI very differently than probably most people. If you ever watched any of those RSI videos I do, you'll note that. So again, smart money, dumb money, and just note the time frame. And then let's just talk about who it is again. It is Sediment Trader, is not mine. This is a paid service, no affiliation with them. I have spoken to them and they are fine with me doing this. What are we noticing? Again, we're noticing that in this area, even cleaner, we can see how we're staying above the 0.7, which is considered a overbought. And that is where they would tell you that you need to be cautious. I don't look at it that way. I look at it very differently. I look at it that when you're flipping here, it's on. It's on like Donkey Kong, one would say, if they remember that saying. But what you're doing is you're lifting right in here. And as you're lifting over this, you start to push, unless we have something like this, where we start seeing smart money dropping and retail going up. And why would that mark a high? Why would that mark an area? For example, when we get to this, we're going to get to that July 28th date. And this is something I didn't pick up on until recently in the past couple of days, because I was looking at this in regards to what's going on in Japan right now and comparing the time frames. But nonetheless, this is where we're at because Japan's actually having some issues again with their yield and what they're going to do with the yen. And I thought that might be a secondary issue here. But by the looks of institutions, it doesn't. And it's not this positioning as much as it's the spread. But let's dive into this just a little bit more so we can get a real full, what I will refer to as flavor for it. And you start seeing right here when we popped over and then right in here. And what is the one thing that you will note again from that time on? Let's use a circle because why not? You'll note that they are pretty much lockstep in with one another, which is very, very differently than where we were here, where we were not lockstep in with one another. And one right here marked a high, and this one just kept on going. Maybe we should make that blue or red to juxtapose it. Got it? Good. So now if we take this, which is just us looking at a 12-month period, and after we overlay the 12-month period, and let's just drill into it one more time and get an even cleaner look at it. And what we'll note is this is 6 months. I want to do 6 months instead of year to date because it really highlights what's transpired here since November 1st or November 20th, actually. And this is where it gets really, to me, this is why I don't want to call it smart money, dumb money. I don't agree with that. And I'll tell you why, because this is smart, right? This is dumb. That's the way we're supposed to look at it, right? but that's not the case. So who bought November? Okay, so just so we're clear, when Powell meets and says we're not going to raise rates, okay, who buys? Retail buys. And you can see the shift right here. And that's to me, that's very important for people to get, that right in this area, we shifted. And institution, or quote, smart money sold when Powell did this. Right? Retail bought. So who's smart and who's dumb? Because retail kicked institutional's butt at that particular time. And since then, institutions don't want to pay up and retail's paying up, and institutions are saying we're going to wait, and that's why they're not even over, this level, but they're not down here anymore. But look at how they are in tandem with one another. And again, this is why it's so important for us when we look at data points to say, okay, what are we really looking at? And this is what we're looking at. So watch this on the spread now. So from a spread perspective, what do we note? We note what I think is, again, as I like to say, glaringly obvious. Since November 1st, which we're just going to say October, and then we're saying this is November 1st, we saw that spread. And once we saw that spread and we saw that peak right here, what happened? Market went higher. Since that spread dropped to here and we hit that low on the spread, what's happened? Market's gone higher. Since that spread from here over, institutions have not caught up to retail. And the only thing that keeps happening is that we keep going. Now, where I would get concerned is that when we start to see retail start getting out, okay, and we start seeing institutions get in, retail panics, right? So when they get out fast. And we're not seeing that. We're not seeing anything like that right now. So we will continue to monitor this, and this is because of your comments, and that's why I'm showing it. But I think this is really important for us to pay attention to. I think it's really significant. So that's it. Have comments on it, drop them, and let's get to it. Now, I hope you found that helpful. And the other segment that I was really surprised about that I got a lot of comments on was actually showing long-term ideas, which I thought was really interesting. A lot of people really didn't know that the majority of my trading is swing trading, long-term position trading. The day trading we talk about because you can talk about it every day. I can't really, like, for example, this was a name that we bought. I'll drop this in right here because I get asked to show what's a special situation was one of the comments. Special situations are when we identify fundamental analysis as the key driving factor, and then we look at a situation and we assess it. So, for example, if we take a look at SPRY here, what we are going to see is that the entry for us was 307. You can see this at 9/21/2023, which actually got us in this day right here. All we did was flip and then get in. Why did we get in this one? We got in this trade very simply because it was something that we saw that was trading near cash valuation at the time. We have people in the community that know this stuff cold. In other words, they know why the FDA basically put the kibosh on it and didn't want to do it. They walked through it. We made an analysis decision based upon the fundamental analysis. And then I just was completely washed out and I had all that cash. And when you go through it, the burn rate wasn't bad. So I knew that I was going to lose 60 cents to hold it for a year. So we were able to get in here and then just use the low as that stop. So it was really going to be in here for about 50, let's call it 60 cents with slippage. And then as soon as it started trading up, then we had the opportunity to do whatever we wanted. Our target was the gap fill, and then we got to the gap fill. We're still in this. We got to the gap fill, and some people closed it. Some people pulled their money out, and others are still in it. And now we're well over a double. But I have no problem showing these in the fundamental analysis. I've actually given this scan out on how we identify these in Saturday videos before. I just did another one of these and we were up 30% in the darn thing in like a day. They do work because there is massive emotion when they miss these FDA approvals and people don't care about fundamentals. They were looking for, going to 20 or 30 and all of a sudden, whether they're selling at 2, 3, or 4, they could really care about the book value of the company. But I'm more than happy to show these kinds of ideas because I do a lot of long-term and swing trading ideas, and I have no problem showing them. So keep the comments coming. Now, coin was down as low as 242 tonight. They are doing a secondary, and I think this is really important. Stock's hardly down on the news. You're only down about $6. On a secondary up here on convertibles, I'm really surprised it's not down more. MicroStrategies did the same thing and the stock hardly went down. But it's kind of hard to think that this is not going to have some kind of sell-off on that. Now, maybe it's not because it's Bitcoin and everybody wants Bitcoin. So they all think they're buying Bitcoin through buying Coinbase, which is just defying all kinds of logic. I don't even know where to go with it. But then again, the market can remain irrational longer than we can remain solvent. And if you know who said that, drop it in the comments. It certainly wasn't me. For me, the easiest trades have just been shorting these. These are just absolute no-brainers, shorting the miners. CLSK was just another winner today. Very, very easy short. Mara, the same thing. Just let them ride up. Let them pop up again and just keep shorting them over and over and over again. I mean, they've just been absolute cash cows as shorts, and I think that we will continue to do that. I do want to talk about Boeing for a second. So I'm just going to FYI on this and then talk about Taiwan Semi as well. But I want to give out some data points so that you're prepared for tomorrow. Number one, Boeing, this is not getting better. You have a whistleblower that mysteriously passed recently, and I'm not going to put on the tinfoil hat, but it's really odd. And then at the same time, you have a wheel that just dropped off another plane. This thing keeps gapping down the way that it is right now. And now there is a rumor, and I believe it's founded at this point. Yep, they were told today by United to stop making the MAX 10s, and they don't want to wait any longer for them and just start building the MAX 9s. And they're also talking to Airbus. So there's some things going on here with Boeing, and I don't think that this is going to get better anytime soon. You know, people would always ask me on the institutional side that why won't you trade Boeing? And this is exactly one of the reasons why not. Now, the other one that's interesting that's happening this evening that you should be aware of, again, is Intel. And this news, I'm surprised, is not hurting the stock as much because, quite frankly, it should. Now, what you have is you have Intel. Pentagon scraps plans to spend $2.5 billion in Intel on a grant. Now, this should really be hurting the stock. After hours, we're seeing NVDA up about $8. AMD's continuing to rally up another $1, which is really, you know, this was just a fascinating trade today. I'm going to spend a second on this. Just the idea on what this did today, we're just straight shot down to 194 in a $10 move. The rebound, the over the high of the day, the failure of the high of the day, the lower highs, the breaking of VWAP, and then just out of nowhere, we're just going to go higher. I mean, just a bipolar day to say the least, but let's clean this all off. And I just want to show you this because it's really not my favorite stock, like at all. But when you have hammers like this and you have a hammer at the top of the chart, it's probably a pretty clean shot that you're going to get to that 207, 207.5 level. So something to talk about. But before we get there, you would also look at the NVIDIA we went over, and I'm not going to redo it. But I don't think people are understanding this, and I think that they should. Taiwan Semi is the great benefactor of this because Taiwan Semi is who Intel, and I don't think they would have done a great job, but that's who they would have competed with. Now, if they were going to go on the lower end, they would have competed with GFS, which is not moving because they make the lower end chips. But that would have been Taiwan Semi here. And for me, I actually like Taiwan Semi. Reminder, you usually have PPI come out tomorrow. And instead, you have PPI coming out on Thursday, which follows CPI. And that can be a big mover for the market as well. That's it.